Yeah, the trading is a simple thing, right? You just go, you open an account, you start buying a stock, and the next day it goes up, and you see a free money, and you sell it, and you'll be happy. And that makes you confident that you made a decision, like something you thought of, and you bought a stock, and it went up. That's a easy cycle. Whenever, let's say, you buy three stocks or four stocks, and two of them went up, the other two did not go up, but they did not fall also in the normal markets. So what happens is, like, we kind of get a, like, our confidence levels will go up, because your account, it may start with the 20,000, it goes to 22,000, 23,000, 25,000. It can even go to 100,000. So in a good market, because you keep making, you put like at $5,000, it becomes 6,000. Then you buy at 6,000, then it becomes 8,000. You see some like crazy ARC stocks or momentum stocks, it goes up. That is easy cycle. And in the easy cycle, when you make money and when you become confident with, that is what the market exactly wants. Like, so many people get confident about their trading process, confident about how they interpret the data, confident about everything. And on a fine day like 2020, like, 22, it will grind us down. It's going to keep inducing the pain. You don't, it's like a thousand cuts. You will see your account going from 100,000 to 70,000, 60,000, and then all of a sudden to 80,000, but again it will come back to 40,000, 50,000. There is no end till you make all the losses. So this process is very, very common. Usually that sell off, if it happens every year, then everybody will be prepared. The reason why so many people wants this training now is because they have seen the pain. If you have not seen the pain, you would not be attending this at all. Yeah, I know about it, how to do. I will not give importance to the risk. So the most important thing is, like, if you don't give the importance to the risk is so big. The most important thing is, like, if you give importance to the risk, you're trying to control the risk. So that process is, it happens, the risk, yeah, I'm going to be risk, the risk is not like today or tomorrow. It has to be every day or every month or every year. So that is what makes you, the trading journey. And as I always say, right, it is a journey. Like, I'm going to share the screen, just the basic charting and all that. So the charts are beautiful because they're going to show you what has happened, on the last, whatever time frame that you are going to look for, right? And see if you can see the screen. Wonderful. So this is like, the reason why I went all the way to like 20 years of data. 22. I normally use a stock chart. That's a, whatever you like it, you can use it, but it's the same data available everywhere. So the reason is, it is a journey. Like, if you see the journey here, S&P, basically, let me put it as a weekly, so at least it will be less visible. Or if I can put like a monthly chart, it's even better. Oh, sorry. Yeah, the monthly chart, you see, it's even better here. So the reason here is, if you see in 2000, if you see it in 2000, so the part is, the S&P was somewhere around 96, and it went up, it went down, it went up, and so all of a sudden, so it sees the same. In fact, if you see, it is only a smaller percentage here, like it is only like a 20% max or something. But here in this case, you see, like, from 100, it went all the way to 55, like 50% correction in S&P itself, right? So, and then how much time it took about it from 2000 to all the way to like 2003 April or May. it's almost like close to 2 years, 8 months or something. So the 2 years, 8 months pain. So this one is only like so far it is only like a 13 months or 14 months. But this one is like so much of pain here, and then the things started, getting better. But again, you see the pain here. All of a sudden, it comes. So what I'm trying to say here is this kind of a risk is what people cannot survive in this market. You can actually make money. You make whatever you do, whatever you do, you'll make money in this market. So you're not going to lose. Even though like you see other stocks are not doing well, one or two of them not doing well. Not doing well means you make like a 10% loss or 20% loss, but others will be covering a lot of ground. But in normal cases that happens. But in this case, what happens is the
representative आया था.
Amazon will be like 80% down, or like I'll just mute. I think all of them are mute. So just okay. Yeah. So in this case, this kind of thing, you people cannot survive. Like if you see Adani fall out, they have like $100 billion and they'll just fall. And Silicon Valley Bank, or sorry, SIVB, it's like it has got $500 billion, and that was like one of the top banks for the venture capitalists and all that. So that has fallen. Lehman Brothers collapse. These things happen overnight. And last 2 weeks ago, like things even Fed, or no, not a single person know about the risk, how much is there in the system, unless the risk comes onto the surface. So that is what like we want to build our mindset. So you cannot interpret the data. So you have to be very, very simple in your analysis. Like every single person is a very good analytic. They have like a very good analytical skills. The only thing is, like the problem with us is like we have analytical power, but the actual execution is where the mismatch is. Like you have a lot of gap between the execution and analysis. Like everybody knows what is the risk. Like in your life, if you're not controlled or mitigated, or managed your risk, you would not be there here. Like in America, like most of the people came from like India and all that, how they manage the work and the classes in the school and everything, right? So it is the same thing here, but only thing is the things are so dynamic, and we will get like kind of really panic, and you buy here and you'll sell here, and after that it starts going up, and then you'll buy here again, it may sell here. So that kind of things happen, and this choppiness will try to make you feel that like you have to buy something, you have to sell something, you have to buy something and sell something. So that kind of thing. So understand that part. I don't know how you manage it, or I don't know how you come up with some kind of a solution saying that yeah, I learned something today, I'm going to apply it. It's not that easy. So it has to be person to person. So how risky you are, how good you are at managing, or how much you are learning. So the one simple thing I would say is you should be having a strong belief in the market, very strong belief in the market. So that will tell you, that will teach you, whatever happens, I'm going to be in the market. I'm going to be here like a 20 years. Like you see, this one is like a 2000, and this is like a 2023. It's like a 23 years. And the next 23 years, we don't know if it may come down further and then starts going up, and they manage it and all that. So we don't exactly know what happens in this kind of market. But only thing is, it is so simple to buy and sell. So why you want to complicate? Like like I buy here and I sell here, which is like almost 4 years away. So every single minute you are watching the market, and you think you can watch for 4 years to make your sell decision. So I don't think many people are like that patient with like Warren Buffett and all that. Like he will just wait. Huh? I'm in the market. I'll wait. He's like, I'm in the market. I'll wait. So that slowly you have to come up with. Like I'm saying, what I mean is like a strong belief. It does not mean that you have to trade every day. You have to be in the market, watch. Nobody is forcing you to buy. Just watch and watch and see what comes on your radar, and then watch again and see what price you like it, and then make a trade. So even in that case, even if you make only 5 trades a month, that's about like 60 trades a year. So those 60 trades are enough. Even if some of them are really big, they are enough. So we have to come up with some kind of a process. So before even that, so you understand what is a market first, what is, how do you want to build a mental strength is what is the most critical thing that you need it. So the mentally, we have to be strong. That does not mean you have to deploy the cash. The only way you are mentally strong is if you have cash in your account. Your concept, your perception of the market will completely change. Like I said, like let's say if the market is crashing and you have a lot of cash sitting in the bank or sorry brokerage account, you are not making any trade, then you have that kind of a confidence. And we have like a most of us like have like a FOMO kind of thing that we want to just do something. Oh, why can't I just put my cash today and tomorrow I'll be exiting it? That's fine, but you can do the trading and all that. But when I say that 1% is the risk, that means it's very high risky stock that you are okay to lose that 1%. But that does not mean that it might go 50% up. The stock might go 50% up, like SIVB you see, but it can also crash. So that's why that 1% risk stock. If you don't want to trade, you don't have to trade. But if it is like a 2%, 3%, if it is like a 5% cash, so how much of the risk you want to take it on that stock? So you have to figure out few things, very important things. Just make a note of it. Maybe I'll send a note after this session tomorrow or later today. So what are the critical things that we need? See in this market, like see it's so beautiful that it is only going up. The problem with this market now is this is 2010, and except the 2011 situation here, it's keep going up, like for 10 years. Like you are not seeing even here also this long. So what will this do? This process will do, it will make everybody risk. Most of the youth, like if he is like a 30-year-old now here, then he'll be like almost a 42 years old. So when he started a career, they have not seen uh, they have not seen uh, they have not seen this kind of a risky market. Even if they have started here, they have seen only risk one time, and they think that, oh, this is done. But the beauty about this one is like I can go all the way to 1965, let's say. Let's see how it looks. See here, it started. Okay, there is a data only from 1990. It is not showing it. See here, this kind of a 2000 is risk. I don't think we have a data. But in what happened in 1970, the inflation issue won't be solved. The problem with the inflation is you have $100,000 in 2015, and now you have like a $200,000. You were more comfortable having $100,000 in 2015 than having $200,000 now, because your purchase power is very less. So the inflation is going to suck that purchase power uh, out of the cash. There is no that kind of a problem is unique. And when you have that kind of a problem, and we don't know what happens, and the problem here now is like here there is no debt on the country. The US was like less debt, so they're able to print more money and pump this stock market. But now they have like a $32 trillion debt, and the debt is the most scariest thing. I don't know, but I have seen so many people in India. I've seen recently Adani, or I have seen like in a close circle and all that. The debt is a time bomb. So they will lose their, like core assets. They lose money. They lose even like a billion. The millionaire will become like the pauper. in that kind of thing. Like if you see the Credit Suisse is such a famous bank, it's going to be sold to UBS tonight just for like a 50 cents of the share. The share was like a $70 or something. So the banks are like a dangerous thing that everybody parks the money there and they take risk with that money. And especially with this market, they started buying the bonds because they have to put the money somewhere. So the bond market was going up, up, up. So even a small crash in the bond market now is shaking up those banks. Let's say if the bond market is is crashed further, I think even JP Morgan, Wells Fargo, everybody will go out of business. So that is the kind of risk on the debt, because like the balance sheets will be looking really bad and all that. So I'm not trying to scare you, because that is the part of it. That's a part of the journey. So we don't have to be on the, what I mean is like we don't have to be on that side of taking the risk. So what you have to do is like you manage your account. So I don't know how you come up with it, but I can give at a high level, saying that you have to have some kind of, or let me see how much cash in this is there, how many trades I'm doing, what kind of stocks I'm buying, whether I'm booking a profit or not. So all those things are very important in this market. So especially when there is a choppiness like here, it will take a lot of time. And the problem here is, I tell you about uh, some what do you call technical things. This is a monthly chart. So this monthly chart, if you look, I look like something, the cloud here. This is a green cloud that you call it as a Ishimukhi cloud. So the cloud was like, nice uptrend here. So now the cloud is like flattening, right? So if you see the flattening cloud, so it has to again go up. That's a lot of effort. Like, it's like an elephant that you have to lift it. So here you see that kind of a flattening here. So once that kind of a flattening happens, that means the cloud has to be, cloud will be like, it's like I said, it is an elephant. It will at least dip once. So the future here is, what it is saying is, in 2020-25, this is 2025, even 2020-25, the market maybe it's only at 395, unless and until we get a lift in the cloud before that. See here, when it says market is 100 in 2000, what it was saying is, even in 2020-23, the market will be only 91, even after 2 years. But the problem is, it is not 91. It has actually went down to like 55, right? So here they will try to push it up here. Even if the market goes up here, the cloud won't be lifted. So the cloud will be still flattening. So in that flattening market, once it cracks that cloud, I'll show you the other stocks in the cloud, how they cracked it. Once it cracks it down, it takes a lot of effort to, like, it may crack it down to 280. That is why you see some of the analysts were saying that, it might go to 2800. So because that 2800 is like where, the cloud is like, even the cloud flattening started going up. So this may be a support level. We don't know when it will come, but it might come also. There is a chance now, if you see one more bank crashing and all that, so it might come. So the overall thing is, it comes or it goes, or whatever it is, but make sure to build a proper risk management plan. So all you have to do is like, how much is the cash in that account, how much is, when you will be taking the risk, when you will be avoiding the risk. So when you kind of prepare yourself for all these negative things, that is only when you will save your account. Like I said, in this case, if these kind of things happen, if I have 100,000 here, and in this case, if I have 80,000, I'm very happy, because the people having 100,000 here in the account, it will be somewhere like a 20,000 in this case. So you are still performing much better. So in this 80,000, once the risk is open, Like you can start taking the risk, then your 80,000 will become 200,000. That's why this kind of a period you have to have some kind of not don't go by individual stock. Look at your account, overall account, and see how it is performing, how much is it there. If it is a minor losses, don't worry about it, but where is the less risky things happening. So all those things are important. Let's what we'll do in this one is like we'll see if we'll do it like in a weekly basis to build some so I'll come up with some topics. Like this is only the introduction I give, but I'll come up with what is the cash and how the cash is managed and all those things. Like if you see uh, at the same time, like markets are like the function of assets, how they are functioning. Like each asset, how is it like real estate is doing, how is the stock markets are doing. So if everything is all clear, then it will start going up. So somehow they are able to manage with a lot of debt, because in this period the US added like $30 trillion debt. And everybody, every banks, every companies, every like even if you see, if somebody is living in an apartment here, now they will be living in a more than $1 million house. The thing is, when they were in apartment, they may have like no debt, mostly zero debt and good balance sheets. Now at this point, you are old and you have a lot of debt, and even though you have the assets, at the same time you have a lot of commitment, and you have like get used to the easy life, and your life is expensive now. So now the pain is more. So there here, even though whatever happens, the pain is less. So the pain is more here. It depends on your risk levels. So that pain is what market likes it. It will cry. It's like to crush the people. Even the countries are getting crushed. So that is all at the risk side. So if you are preparing for the risk, that is the best thing that can happen to you in the market. I mean, that like your long term, you should be like committed to the market, and you are basically saying that, thinking that it is a journey. So I don't have to make a decision now. I can watch the market. I can just see what is going on. And when the very good thing is, there was no social media or anything here. Now I think the impact, it should have already gone here. The only thing is, because of the social media and all that, people, the knowledge is spreading everywhere. So there are like so many people bought what do you call the option puts or spreads or something to protect the account. Let's say if you have $100,000 in the account, and if you buy like a $10,000 or $20,000 worth of options puts, risking like another 6 months or 8 months, that whole account is protected. So that kind of things, risk management strategies are very good these days, and that is the reason why market is not going down. Otherwise it should have already gone down by this time. So maybe that is a good thing. So once they start managing here, and then the same options will help to grow the account. So this is one way of doing it. And let's see, like I just want to show you the basic charting, what happens in, let's say for example, take, everybody likes Tesla, and take on Tesla on a monthly basis. So see here, the stock was $12 here in 2013. It was $12 in 2019, right? So 2013 to 2019, it did not move like, even though it has like a terrific growth, it did not move. Once it got the cloud support, once it got that thing turning on, so in 2019 it started going up. And then now you have that cooling period. We don't know if I take it, the cloud also is flattening, so it might even break the cloud. Once it breaks the cloud, then it will be like it can even go to 95, because that is where 130 at least. That is where it got a little bit of pump. So the basic chart patterns are, but have this. So the basic chart patterns here is the moving averages. So the moving averages give us a very good indication of what is happening in the stock. Like if you see the moving average here, the 200-day moving average or 100-day moving average or 50-day, 220-day EMA. 20-day EMA is like for a short term. So you can tell that, the stock is getting a short-term momentum if this is turning up. Now it is flattening and it is not able to break the 20-day. And now that 20-day was able to break the cloud. And at the same time, it was able to go to that all the way from oversold to the overbought. So all these are like basic things is, look for RSI, how the RSI is looking, and look for CTM is, change Chandler, what you call is a trend meter or something that you have. I don't know if you have it in here. So that tells us that if it is the trend is, how is the trend here? So the trend started weakening here. It's not able to go to the green. So it is like a so bumpy. The trend is so low. When the trend is so low, the stock is pulling back, pulling back, pulling back. So once the trend started going, breaking this point, like this point is here. So this is where, you see, this is where. So when it breaks this point, the 143 after this, then this trend is really, jumping and all the way it went up. Now it is kind of a cooling down. So the another thing that I like here is the ADX chart or slow stow and all that. So if we have some stocks, let me know. I will just look here and see if somebody likes to understand the charting pattern. So what is the indicator? We are using on the chart? Yeah, these are the indicators. I'll just take, you can use any of the moving averages, but I just, for the short term, I use like a 20-day moving average and all that. And you can use the cloud is like, basically it is not an indicator. It tells you the overall trend. You cannot come up with a trade based on the cloud, but you can come up with a trade based on some kind of moving averages and all that. So the another thing is like slow stow is a very good one. So which is the black line is crossing the red line, so that's when like the momentum starts. So here the black line is crossing red, so when that happens, you kind of look into the RSI, you add like a 2-3 indicators, then you'll understand stock. So the problem with VA here is in November it started going up. The 20-day was the support all the way up. So that 20-day broke down. When did it happen? On February 16th. So after that, it started showing the weakness. Now the 20-day EMA is even below that 50-day, and now it is even coming down into the cloud. So this is kind of a weak spot. Once it breaks down the cloud, it has to go to take a support here, 185, 180, 170, and all that. And at the same time, the other indicator is ADX. If you are aware of ADX, you can learn about it. What it tells you is, so that's the simple thing, right? Another important thing in the stock market is, it is a strength and weakness. So how much is there in the strength or how much is there in the weakness? So that means this is a strong, there is a lot of strength here, and now it is weakening. How much weakness is there? Nobody knows. So once the weakness stops, then the strengths pick up, right? People want to see that it pull back something, then they'll start adding. So when the pullback will be over, we don't know. So when it will be over is basically, like when the 20-day EMA comes and take the support of 20 EMA. So once it takes the 20 EMA support, it is not guaranteed that it will go all the way up. So you have to see again, how much is the strength. So this is like you can analyze with multiple, even Bollinger Band. If you add it, you see the band here, it is pushing the band. The band is up here, and from this point the band is flattening. So it is like uptrend, sideways, downtrend. So the sideways is like I was always telling, right? The sideways is the most difficult thing to trade. So either you avoid, because somebody bought here and they saw that it is going to go sideways, and you have saved almost like how much time, like more than 2 months. The price is still below that. So the 2 months period, but in this case the 2 months period, the market is, it has given you the most of the gains in this 2 months. So the next 2 months are nothing. So that's why I'm saying, like, if you feel that the next 2 months it will take a lot of time to recoup or get energy and all that, so then you should avoid. So here also the same thing. So this sideways can become a downturn, right? Or this sideways can be over, and then it can start a new uptrend. So in this case, the sideways is over, like here, and then it started weakening. So it got, so that kind of thing is like happens in a seasonality pattern. Like I said, the Feb is the best period that you sell off and wait, and you see where the stocks bottom, and then you can actually see it. So you can actually take the bet. So in mostly, if you see, yeah, people say death cross and all that, right? But I strongly believe, it is just a term, but you cannot actually see the strength out of death cross, or you cannot actually see the strength out of the golden cross or something. Because recently the S&P is like a golden cross, but it's still showing the weakness. It might still show the strength, but it is not that. So the purpose of this is like you start looking into the charts, like so many charts. Like if you look at the chart like Apple, how is the Apple performing? So it is like, from Feb 3rd, it is a sideways trend. So it is trying to still above the, like the cloud and all that. The strength is better in this period when the market is actually going sideways. Apple gets a lot of money because Apple has got like $150 billion cash, and that is going to get them a lot of, like another $7 or $8 billion as the interest income itself. So this is we don't know how it happens. Like in this case, if you see, it went all the way up and then it will crash. So but once that what I would say is, once this 150 is broken, which is a 20 EMA, then you should not be in Apple at all, and wait for that to pick it up. So like you say, even though you lose this part, like from 120 to 132, that is still okay. See, once it gets support of 20 EMA, people ride the trend. So in this overall period of trading, or overall period of stock market, the stock movement, you have to pick a spot to enter, and you have to pick a spot to exit. So that is the most critical thing, right? The stock will be trading for like 30 years, 40 years, but when are you going to enter? When are you going to exit? So you find out your entry points, you find out your exit points. Some people will say, what, I don't want to even go over 20. I'll go once it goes above this 50-day moving average. That is also okay. So they are entering at 140, and once it breaks the 50-day, then they will exit. So they might make only like a $2, but still it is a trade. Trade is a trade as long as you execute as per your plan. So this guy is like more less risky. This guy is like he may not make a lot of money, but at the same time, he's going to hold a lot of cash even during this period, so he'll be safe. So the problem here is, we try to enter when it is here, oh, and then it goes down. Because once you see the chart is telling us that it is going to go down. It is clearly telling that I'm not going to go up, because I have to cross these moving averages first. So when you're looking at this one, so the moving average, if you can keep looking at the moving average, should be okay. And the other thing is like people talk about MACD also. If you want, you can add more, like whatever you want to add, you can add all those things. People say, okay, this is going down. So what is happening in MACD? So the MACD black line crossed here. So it's going all the way down here. So when it is going down, people say you should not be even part of it. It has to cross up. So at this point, when it crossed, that is here. So when that is the same spot that it is coinciding with 20-day EMA, and then people can, you're more confident of buying at $132 than at $123. But that is for what, like a trader. But if you're like a long-term investor, you're not worried about the trend. Oh, I buy a little bit here. What is wrong? I'll buy a little bit here if it comes. So, so if you are not looking for that's why I'm saying, if what is your plan of trading? What the plan of trading should be? Every stock should be treated separately. So you cannot same way you cannot treat Apple. Oh, I'll buy when it is going down, or at the same time you cannot treat this one like uh, let's say that some ARK stock, or like even some meme stock like we have so many memes, right? GameStop and all that. So when it is in the GameStop, you don't know the price of it. It is right now 15. It can even become $2. So that is the reason why we have come up with that master list, right? So the master list is where business is safe. Even though you buy, the stock will be weak. If you buy slowly, don't deploy a lot of cash. At the same time, in a single position, don't deploy more than 7%, because you have like thousands of stocks available. So why you want to just stick to, like put a lot of risk in one few stocks? So even if you like, so the master stocks, so at what price you're buying. So end of the day, it all comes to your psychology. You have to identify the buy points. You have to identify the sell points. You have to understand that it is a journey, and you have to say that there will be strength in the market, there will be weakness in the market. So here is a strength, here is a weakness, here is a strength, here is a weakness, here is a weakness, this is a sideways, this is a weakness, this is some strength, weakness. So you have to identify using the chart if you are looking at a strength or weakness. So when the stock is like a flow store or whatever I say, right? If it is going down, then there is a weakness. So once it bottoms, then there is a probability of picking up. The strength is picking up. Maybe at this point it will pick up. At this point it will pick up. But once it crossed that line, yeah, it started picking up. So this is the strength. So this is maybe the one of the trades that you can do till it is crossover. So whatever money that you make, if you are making 40 or 50 trades in a year, that should be good enough for you to actually develop some kind of confidence. So the most important thing is you have to develop a confidence, and you have to develop a process, and you should be able to hold cash, so that when some opportunities comes, you don't have to like sell some stocks which you like and then raise cash, and then that FOMO kind of thing you don't need to have. So if you have a lot of cash, so then you have to add slowly. Then you don't, even let's say if somebody missed Tesla, and then you don't have to worry about it. It will come again. So why no, yeah, I missed it. So what if it will come again? So when it comes again, then you have a plan to again see to make a trade, right? So that kind of a FOMO thing, if you don't have. And another important thing that I observed, right, even myself or so many people have it, is very very sensitive. That means, oh, I should have made this trade, I should not have done that, I should have. So you should not be that, because if nobody can make a perfect decision at the time. Once not a single person are successful in 70% of the trading. That means if they take if they take any trades, maximum they will be having a success rate of 60-65%, even a successful trader. But in that 60% trades, or some people trade, that success rate is only 30%. That means out of 100 trades, they get only 30 trades right. But the other remaining 70 trades, they will exit it at, maybe they will buy here, they will exit here. So what is this 202? And they will exit at 193. They're okay with this loss because they know that the capital is more important. But when they're making a trade, they will get huge. The 30% trades are very huge. Okay. So the 30% of the trading, some trades they may even make like 100%, 50%. Like they put like a tenth of, in the $100,000, they put like a $5,000, and 5,000 becoming 5,000. So that $5,000 trades, maybe like a 10 trades they will do a year. But the other trades are like when they are losing, they might lose $500, $300, and all that. So that itself, even they're able to move that account from 100 to 200K in a year, even with that just 30% success rate. So that is a critical part of it. If you, because somebody is saying buy here, oh, you can sell here. I would say that you can sell here because you have a profit, but that guy won't be listening because I see still the trend and he will sell here. So see how good a trade of like 128 to 194, and many people will be buying here and here and here and here, and they cannot wait for just a 1 month to get a their price, or they cannot just like do some kind of thing. It's not me, even I do it sometimes. But what I'm trying to say is, like, if you want to plan, you should have a trade plan for each trade. What, when you're buying, what is your buy point, what is your sell point, and at the same time, build a mindset. Never ever try run out of the cash, because we don't know what opportunities come tomorrow. If you don't have a cash, then that's a lost opportunity. Even though you know that it is going to go up, I don't have a cash to do it, because a one good trade is enough to offset like a 3 or 4 lost trades, right? So that is how we think. And at the same time, like, what is the status of your account is most important thing. So these kind of small points, if you induce, like, if you talk about it, you focus on them slowly, and then you come up with saying that, okay, this is what I want to do in my trading journey, like for next 20 years, 25, 30 years, this is what I want to do. That is where you see a real fruit. Because I'm telling you, the most money, the highest pay, highest earning income is from the traders, because they're the top 20% of the traders, they make hell out of money. Like they just like make like profits every market. The reason is, like, they got used to all this pain. They came up with a plan, and they following their own plan. They don't even care if you talk to them. Oh, market crash. Oh, okay, that's okay. Market is going up. They're okay. For them, it is like a business as usual, right? So if you see the let me go. Like, look at like 100 or 200 charts a week or something. Then you automatically see, okay, this is, I should not have FOMO, and I should figure out a buy point or sell point, and then you yourself will say, okay, this is where I can buy power. And that is the reason why we started that member groups, to post a chart. Simple trade. If you are is the first attempt or second attempt or third attempt, I think that is a very good process. Like I say, oh, this is a good process of buying. Let me see. I would say Microsoft is a good to buy here at 245. And it comes, that's a first attempt. It comes to 235, 230. Oh, this is the second attempt I'm buying here. And if it comes to 218, you know what? That day, this is the third attempt I'm going to buy here. So once you see a third attempt on a master list stock, I think the probabilities are very high, because those master stocks, master lists that we are prepared, right? Like, there's nothing like magic in them. They're just like a very good companies. They will come on sale also. So that master stocks, if we get a third attempt trade, That will be beautiful. You might get like a 40 or 50 trades a year. The probability of going up are very high. So that kind of process, let's do it. And Microsoft at this point is, see, the CTM is a trend meter. Okay. So if you look at a CTM, this is the worst bear trend. That means all the negativity is priced at this point, at this point, at this point, at this point. See this? So when you get that point, and from there, it got that AI thing, it went all the way to green. So right now, the green, it is in the green now, which means it is overextended here. So the best period is to catch it at this level. So when the trend is very low. So right now, let's see the stocks that are really trending bad. So Baba with that negative pullback, even it is not just flattening trend, but it is still not going to the negative. The problem with the going into the negative trend is once enters here, right, the negative trend, it has to leave the trend here. So this is also a painful period. So if you see this period, this is where it entered the negative period. This is where it entered the negative period. And when it is leaving that negative period, the stock was already down further. So the once it is leaving, then that is where you should enter. Okay, this is leaving that negative trend. So then that means, like some bad period is over. So the next trend that might come is a good period. So at this point, when it is leaving the trend, it may be this period. Even though it fell a little bit, you should not be worried because the strength, even in the RSI, it is showing that the deeply oversold conditions are over. So in this case, it is once it ends, either you go with the trend at the same time or you go with the RSI. So the RSI entered into the oversold territory here. So it is still in a oversold territory. So it has to leave the territory here. Once it leaves, maybe it leaves tomorrow or it leaves like next week. So once it leaves, maybe it leaves at this point or maybe it leaves once it goes above the 20-day EMA. The 20-day EMA will come to 85 or something, and then it is easy to break. So once that breaks, once it leaves that, then people will come behind it and buying it. So that buying pressure will take you to this. And now it has got on the upper side, it has got the negative cloud, it has got the, this, so we get all the resistance here, but it is in a better position to tackle that resistance, right? So that is what you call it as a you can actually see the journey of the stock here with the trends and the RSI and the MACD. The MACD also is trying to cross here, so it is flattening. So maybe this is important zone. So the Bollinger Band support is here. So once it breaks, I'm not saying it won't break. Once it breaks, the new trend downtrend starts. It will go here negative, and it may go to even 70, and from there it will turn. But the chances, that is how you analyze the stock, saying that, oh, it just entered the negative trend, why would I buy here? So let it leave the trend. So once it starts leaving, so it may be even like another 20% downtrend. So so this process here is what we are doing here, is we are trying to figure out the buy side or the sell side, what is the best thing, right? What is the best time to enter the stock? It is not the price. Remember always, it is not the price that we should enter. If you're a long-term trader, then you should look for the price. But if you're a short-term trader, you have to look for the trend. So if you look at Melee, see it, once it flattens, right? The Bollinger Band flattens here, then it will take a lot of time to hit or break it into the uptrend. So already the cloud support is there, but the cloud is also distant. So at this time, unless it breaks this point like 1273, and then it moves that Bollinger Band also in the upside. So it is going to be sideways here. So here you have to be cautious. Why you have to be cautious? Because if it breaks this 20 EMA and it breaks the cloud, it has all the way to go to the 1000 level, or the next 900 level support. So if you see here also, see here at this point, super green. The super green means it is in a super trend, right? So once it is in a super trend, that means it has come long way upside. So I would actually sell here if it is in a super green. I would sell here, it's in a super green. So it has come here, it is still in a green, better green or super green. So if it comes to that negative zone here and it is leaving here, see here, if it is coming into the negative zone here on $18, sorry, here, and when it is leaving here, it is at this price. So I would buy here, and when the trend is leaving that negativity, so once that negativity is over, then you can actually ride the trend here based on, once the negativity is over, then you can pick up the 20-day EMA and then ride till the 20-day is not broken. And then, like once it is broken, the 20-day EMA, see how much time it took the sideways. So this sideways trend is what is more painful, that your capital is stuck here and your capital is stuck till this point. It's almost like 22 August to 6th Jan. So almost like a 4 months, September, October, November, December. So more than 4 months. So the problem is, so the important things here is when to make easy money. First thing, what is the buy thing? What price I'm buying? So what is the trend when I'm buying it? Second thing, how much cash I should hold in the account. Third thing, and what kind of stock I am buying, right? Is it a quality stock or big stock? And how much I am betting for the stock, and when I'm going to exit. So these things are most important thing. So if you figure out all these points, then your probabilities will go up a lot. Even though if I come and say, what, where buy here, you'll say, what, I'm still want to wait it because it's in a green. Let me see if there is a pullback. Because then you see even a 1 more month pain. Or maybe you can look at the same time how the market overall is doing, and then you can decide, come to the stock and say, even though the stock is looking good, I want to, if the market is looking better, then you can say, oh, okay, I can buy for I can buy like 100 stocks. But if the market is not looking good, you know what, in this market I want to take risk, I want to buy only 20 stocks, and let me see if in a week if I want to buy 20 more. So this is all like we do in our life, right? Entirely. When you want to buy a stock, house, or when you want to buy anything, or when you want to take a risk, like which restaurant to go, what time to go. If the weather is bad, why should we go to the restaurant today? Let's go when the weather is better, right? So that kind of things is there with us. The only thing is that the same thing that we have to apply in the stocks also. So always understand that they are not going to run away. Even if they are going to run away and they are going to gone, you don't have to worry about that. You have other stocks to choose, right? So you don't have to be like, oh, I missed it, I missed it, I missed it. It might come later, maybe in a 6 months, or maybe after a year. It might, in the meantime, you're not like, you don't want to buy anything else, right? If there are like tons of good companies out there, so you can do a trading on every single one. So if you, what you see is what goes in your brain. So if you keep looking at the charts, keep looking at this kind of uh, improve your analysis, and then that itself will stop you doing it. So if you don't look at the stocks charts, or if you don't do some kind of like homework on what to buy, when to buy, and all that, then you end up always taking an instant decision. In the morning you come, by 12 o'clock you don't do a trade. By 12 o'clock you will just enter one trade because you just got a tip from someone, or you got FOMO inside you, or some news you heard, like all those things. So those things, they'll make you quick money 1 day, 2 days. But in this market, this is a bear market where that's a rug pull happens. So if that rug pull happens, it is so terrible that your capital is stuck. Like I'm saying, your capital is stuck, and we don't have unlimited capital. So that we have to realize. So I have very limited capital. So how should I play with it? So these are all the mindset things that you have to come up with. So I don't have a capital. How should I play with it? So when should I enter? What stock should I buy? How much to buy? And when to exit? So is there, I'm doing some analysis before doing, buying a stock. Is it a right time to buy because the overall market is weak? How much to bet when the market is good, right? So you have, is it a ETF? Is it for a long term I'm buying? Is it for a short term I'm buying? When I'm going to exit it? So the more questions you ask, more questions you may not have the answers, but your decision making will improve a lot. And at the same time, make it very simple. Don't complicate it, because the simple decisions are easy to take. Oh, I can't buy this, I can buy this. So to come to that decision, right? So you just have to see, maybe you get used to, oh, I just follow the moving averages. Okay, just look at that. I just follow the trend, or I just follow the MACD, or I may add a couple of indicators and just follow two or three, or I'll buy only when there is a good stock, and I'll buy only average these stocks and keep it for long term. So these are like a very simple decisions you make. So the simple decisions are the best decisions. The smart people, the problem with the stock market, you know what? Who will lose the money? Anybody can guess in the stock market? The the highly talented people lose the money in the stock market. The reason is they think they are very highly talented, because the problem is they're very highly talented in their work, or when compared to the peers, or when they compare to their anyone else, right? But when they compare to the market, nobody is talented high. I'm telling you, because the market is such a highly tricky thing. It can trick a best person in the world also. Nobody is like the smartest. Nobody can make 100 decisions right. Not even 100. Come to, can you make a next 10 decisions right in the market? Nobody can do that. Oh, everybody will say, maybe I can do 5, I can do 6, I can do 3, but not even close to 8 or 9, even in the good market. So the 4 days market is up and people will be enjoying a lot, like they see their account going up, and then all of a sudden it will crash. So all these things, let's see how it goes, like weekly basis. We come up with a little bit of topics like this, and then we'll discuss where it go through the some of the stocks and all that. So if you look at Nvidia last time, so what I like to do is, like, I'll try to do all our master list stocks and see where. So other thing, people talk about is, see that candle here. When you have that the opening is, and then it went up but it closed low. So these candles are not good. That means there is a selling here in the end. So once that candle happens, it's kind of little bit negative, and it is also overextended. So don't buy a stock. This is like buying a FOMO if you buy here, because it is overextended. Even though the trend is super good, see here, it is in a green, 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 green for so long. So even though it is in a green, I would not sell here, because it is the moving average 20 is still going up. Here also it is still going up. I don't sell it, but the problem is, it's even this is like extended. Like 233 is the 20-day moving average. It is already at $20 half above that price. So that is overextended in this market. And RSI is not able to go into the overbought zone. So it should have gone to overbought zone, but it is not going. So that is also. So another thing is, the MACD is showing somewhat better, but this is, the ADX line is important if you learn, because don't try to complicate and learn everything. But I'm just looking at multiple indicators. this is a point to sell because the black line in the ADX is crossed all the red and blue, sorry, the red and green. So this point, if you see, this is a point to sell. Even though it went up, I would sell in this points. Like when this is above this point, maybe at this point I'll sell. So it is actually going up with some kind of FOMO or something. So we don't have to be part of it now. If you already have it, then you can give it. Okay. So it is, see, the charts are like a history. This is happened. So you have to believe that. Okay, this is what has happened. What has happened in the market? This is like a evidence. So this will give you a lot of information about what is happening in the stock, in that particular stock. So it's a beautiful thing that you can analyze the market, you can analyze the stock, you can analyze this, and it is like like I from next time I will try to see some kind of it is like a story kind of thing. So the story is uh, what do you call, it's like a Kurukshetra, right? If you take so who is going to win, who is going to lose, end of the day only Krishna knows that who are going to survive or who are not going to survive and all that. So here the problem in the market is there is no Krishna here, but it is just a Kurukshetra. And like if you take like a 20 years or 30 years term, then maybe a little bit Fed knows something where they're taking it, but nobody knows it. So it is like a Kurukshetra that who is going to die tomorrow, don't know. Who is going to get a lifeline, don't know. So that kind of thing is going on in the market. So it is a constant war between the buyers and sellers and momentum and the news. So and the other thing is the most important thing. Remember, right? This is a journey, right? So how, if you want to do 20 years of journey in the market, another 20 years of journey in the market, don't burn your brain now. So take it slowly. So how do you plan for 20 years of trading? Because the way, if you work like morning to evening on the stocks and get tensed and all that, it may spoil your health or it may spoil anything, and it is not worth. So to do that, you have to come up with your own plan, like a focus on a list of stocks that you like and just follow them and see where they are giving you the buy point, and where, how you circulate your cash, and how the overall market is looking good, how the overall market is looking good. So all those things is what is important. Not not just like I know everything in the stock market but still I can't make money. Don't be like that. Even though you know very few things in the market, you can still make money in the market. So here the problem with the Snap is, man, I don't like that guy CEO. So the Facebook, like Meta CEO, is much better because he's like, he tries something, but this guy doesn't try anything. He's just calm. He's introvert, like he don't want to do, but he has got a good product. That's what he says. But overall, see, it is like such a sideways trend. People don't like that. The price is very good here. Let's buy, and then they push it up to like $9 or $10, and they stop. So right now it's still sideways, but good thing is it is getting some support here, and people are by 24th April. The cloud is telling that it may be above the cloud. That means what? It may be above like 11.3, which is almost same like now, or it may be going here. So it has to break these points here. Like look at the resistance here. It's at 12.5, 12.5, 12, 12, 12, 12, 12. So that there is like a ton of people waiting to sell when it goes to 12. So it has to clear this and get them out of, maybe this time it is doing it. In this case, it is negative. So when the trend is negative, when it comes to 12, people are selling. Now the trend is little better. So when it goes to 12 and above, people may start buying. You know what? Finally it is going to break that price. So it may break that price and go to 15 or 16, but it happens sometimes. I don't know when it is, but it is going to happen sometime in like 6 months, maybe. 3 months. But here also it is not able to go to the deeply oversold positions here, and the RSI is not oversold anytime, so which is a good thing. Only part is here it was oversold back in like last year. So even the CTM is, so this is like a no trend at this point, but it is turning, from negative to positive. So once it goes here and breaks this price like a 13, it will quickly jump to 18 or something. See this 16. So once it breaks 13, then it goes to 16 straight away. So that is that's about Snap. Okay. So we'll see. It is almost like an hour now. I'll try to save this to the computer, but I'll see how I will share it to you guys. And let's see if we can have next week also. But I'll come up with some other topic on the weekly basis to discuss. So in the meantime, like get familiar with some of the concepts that I told here. Okay. So no other questions, right? We can leave now. And thanks for joining.
Thank you.
All right, guys. Good night.
Thanks. Good night.
Yeah, I'll try to see the video charts also. So take care. Bye.
Thank you.
Thanks so much, Pawan.
Yep, no problem.